Welcome to everyone. In this video you're going to learn how to identify the peaks in stock market using the cycles. If you like the video, please click on the like button, subscribe and click on the bell to make sure you don't miss the next videos. Thank you. Before we start, make sure you read carefully the disclaimer. The purpose of this video is for education only. This is a chart of the Dow Jones Industrial Average. With that kind of chart it is very difficult, even almost impossible, to know what the market will do next. Is the peak a minor or major peak? To know when the correction is over and when the market will bottom. In this chart I add the 40 days cycle. We already have a little idea where we can expect the low for this cycle. Let's start from the first low. Now let's move to where the next 40 days cycle is supposed to bottom. We already know when the market should find support. Then now we know, from where a new 40 days cycle will start, we can expect very soon the market moving up. The question is, where is the 40 days cycle peak? First let's identify the last 20 days cycle low. Draw an uptrend line from the bottom of the chart trough, the 20 days cycle low. The blue line. When the market crossed below the trend line, this confirmed the peak of the next higher cycle is formed or is in formation. In this case, the trend line have been drawn with the 20 days cycle, then we can identify the 40 days cycle peak right there. This trend line Hurst called that the VTL, it stand for value trend line. In general rules, when the market break below the VTL, this confirmed the peak of the next higher degree cycle is forming or formed. In this case, since the VTL is a 20 days VTL, the next higher degree cycle is the 40 days, then this peak is the 40 days peak. Let's examine where the price peak occurred compared to the cycle peak. The cycle peak is right there and the price peak occur after the cycle peak. Hurst called that the right translation. When this occurs, this is usually bullish for the market. So on this chart we can expect a moderate correction. This chart is about the price targets. The blue line represent the cycle lines. Hurst called them the FLD, which stand for the future line of demarcation. But to make it easy, I will call them the cycle lines. The general rules is when the market cross above or below the cycle lines, this will provide a potential targets. We will see in details in the next video. Here the 40 days cycle. The red line is where the second 40 days cycle prices peak occurred. As we can see, it's happened on the left side of the cycle peak. We call that left translation, which usually is bearish for the market. So we can expect a bigger correction in the second 40 days cycle than the first one. At the same time, the red line mark the 80 days cycle peak, which occurred on the right side of the cycle peak. The correction for the 80 days cycle will be moderate, especially we already have an idea where it can bottom with the target price from the cycle line. Let's put together what we just learned today. Let's draw the first 20 days cycle with the both 10 days cycle. The bottom on the left is a major low of the SP 500. That's where the 10 days cycle should find support. We can expect the 20 days cycle to peak soon. This is the SP 500. Here the 10 days cycle peak. And the 10 days low. It's time to draw the 10 days cycle trend line. The market crossed below the 10 days cycle trend line here, confirming the 20 days cycle peak is in formation. See where the 20 days price peak occur compared to the cycle peak. On the right side of the market, we call right translation, usually bullish for the market, meaning the correction should be moderate. We are now in the time zone where the 20 days low should occur, so we can expect a rebound soon. We can label with confidence the 20 days low. It's time to draw the future 10 and 20 days cycle. We can estimate approximately the next 20 days peaks and bottoms. This is only an estimation, because of the principle of variation, see the previous video. The blue lines are the 20 days cycle peaks and the red the 20 days cycles trough. Now we can draw the 20 days cycle trend line, which will help us to identify the 40 days cycle peak. The market crossed below the trend line here. This telling us, there is a very high probability the 40 days cycle peak is here, or is in formation. Let's label the 40 days peak. It may be not at this exact place, but for sure he is in formation. The 40 days cycle peak occurred late in the cycle. We have a right translation, meaning the correction shouldn't be very important. Even as time-wise we are in the target zone, 37 days, the 40 days cycle average is 34 days. We have to wait little bit to label the 40 days cycle low. The prices go above the previous high, but since the last 40 days cycle peak, the market moved basically sideways. Let's label the 40 days cycle low. Time to draw the 40 days cycle trend line, which will help us to identify the 80 days peak when the market will cross below this trend line. The market crossed below his trend line right there, telling us the 80 days cycle peak is in formation. Is this peak or he's still to come? For now is not the most important point. The most important is where the market will find support. On the nominal model, the 80 days cycle is an average of 68 days. At that point only 54 days elapsed since the major low, too short to be the 80 days cycle low. So we can expect a rally to form the next 10 days cycle peak. Then a decline which should end in around 14 days. Some peoples will place the 40 days low here and draw the 40 days trend line. But in this case, the 40 days cycle is 48 days long, way too long for a 40 days cycle. But let's pretend this is the 40 days low. Let's see what will change, in this case. The market crossed below his trend line here, telling us the 80 days peak is formed. What's next? The market should rally to the next 10 days cycle peak and decline into the 80 days cycle low. So there is no difference for the next move. As expected, we had a rally for the 10-day cycle. Then the market declined to form the 80 days cycle low. The low occurred at 69 days. Remember, the 80 days average is 68 days. We can now draw the 80 days cycle trend line and expected the market moving up. If in the next few days the market make new low, then we will adjust the trend line, but it's matter of 1 or 2 days maximum. This is the end of this video. Thank you for following me. Next week I will publish another video with different topic. If you like the video, please click on the like button, subscribe and click on the bell to make sure you don't miss the next videos.